Boom! What is up, Waves Capital? It's Royce Jacob. Welcome back to the channel. In this video, I want to talk to you about how long I believe the resurgence that we're currently experiencing in the stock market could last. And to do so, I want to share a few pretty interesting charts with you guys dating way back so we can hopefully use historical data to our advantage to hopefully give us some insight as to how the next month or two might look for the markets across the board. All right, so on top of using this historical data, I also want to talk to you guys how I'm implementing this information to my portfolio and which sectors or segments of the market, hint, hint, small caps and growth stocks, I am personally the most excited about right now. Okay, so real quick before we get into it, on the notes of the portfolio and of growth stocks as well. You guys would obviously know this if you are part of Waves Capital. But if not, I just want to let you know that the past 10 days, the beginning of this month, the month of August so far, has been the most profitable from a percentage gain perspective for my personal portfolio, for my career, for Waves Capital that we have ever experienced. So I'm very excited about that. Just right off the bat, you guys, cheers if you have been riding these waves with me, and cheers to more to come. But if not, you guys join the team, join the winning team, and check out the first link down in the description box below. That is going to be my complete portfolio, daily newsletter, and or Waves Capital, which is a complete breakdown of my entire personal portfolio, all my call options, put options, stock positions, which I do update every single trading day. And along with every update, I send out multiple newsletters explaining my thoughts and giving you guys whatever information I feel is most relevant for you. Okay, good example of this real quick. And I do want to reference some of the stocks we mentioned earlier this month in the video I posted on July 31st, where we pretty much called it, you guys. And I know a lot of you were thinking the same, but the title of that was Growth Stocks Will Make a Massive Comeback in August. These are my three favorite trades. Those names were SoFi, Riot, and Matterport. Matterport right now, at the time of recording, just announced earnings. Their Q2 earnings. We were bullish. We were well positioned. These calls are absolutely going to go ballistic tomorrow because currently the stock is up over 16.5% after hours. SoFi announced earnings about a week ago. The stock following earnings ripped 30%. And Riot, of course, is being a riot and a ripping right now. So just look at the stock price here, you guys. Look at what they're at now. And that should give you guys some decent insight as to why the portfolio is doing so well. And again, I really just want to encourage you guys to give it a shot. You can always unsubscribe, but I trust you'll be sticking around. And if so, welcome to the winning team once again. I'll see you in there. Let's cover growth stocks. Again, we'll talk about this because I love to see the trend of just investors, analysts, institutions becoming increasingly bullish on growth stocks because, of course, that's good for news for the portfolio. But again, when the markets overall are doing well, which they are, and I think this will persist, I'll explain why that is and how long that will last, once again, using this historical data. But, again, why growth stocks are the ideal way to play it, because if the overall markets are doing well, growth stocks are doing even better. Okay, so let's read through this, take a look at these charts, and give you guys what I believe is going to be, could potentially play out as a pretty accurate estimate on how long this short-term rally could last, or this little mini bull market. So you can see here that the S&P saw its bottom in late June. This is gonna move up here. This is a chart, right, Chia? This is a chart of the S&P 500 from 2002 to 2003. And I found that this is the technical and fundamental environment that the analysts I respect believe to be the most similar to what we're experiencing now in 2022. Not going to get into the specifics of why that is, but you guys can do some Googling to find that out if you want to dig deeper into this. So anyway, take a look at this chart. Take a good look at it, but we'll explain it right here. You can see here that the S&P saw its bottom in late June, then it went on to experience a mostly uninterrupted rally until late September. Historically, oh my God. History doesn't repeat itself, but it does tend to rhyme, especially when it comes to the markets. And I can tell you now that I'll definitely be keeping this data in mind when it comes to portfolio construction. So again, you guys can see right here. So far, we are following a pretty similar trajectory to the markets, right? Or to the markets back in 2002 to 2003. And what we saw there was a bottom. You could say, we'll just call the bottom July 1st, which is pretty similar to what we saw this time around. It was a little earlier. It was mid-June that the markets this year saw the bottom, but this is pretty darn close. What's most important here is the amount of time that this rally persists. And the reason, from a fundamental perspective, we've been covering this a lot lately, but the reason I'm so bullish on the markets right now is the CPI data was released today. This was pretty much the last macroeconomic fundamental hurdle that investors have been waiting for. This was looming for many investors. The markets have been a little bit shaky in anticipation of the release of the July CPI data, which is pretty much just showing whether inflation month over month is becoming hotter or whether it's finally cooling down. This month, we were at 8.5%. Last month, we're at 9.1%. Inflation is cooling down significantly. That's almost, a 10% decrease month over month. And the markets loved that news. Okay? So that's great. Because that ultimately means that the Fed, at their next meeting in September, because they take the month of August off, which is even more reason to believe that this upside could persist, because we don't even have the possibility of any more Fed intervention until September. But come September, if inflation continues to cool down, the Fed is likely to be far less offensive when it comes to hiking interest rates and taking their foot off the gas a little bit. And that's great news for the markets, because ultimately, an environment where there are raising interest rates is bad news for the markets and specifically tech stocks. So right now, we're looking good. Q2 earnings season, I believe at this point in time, 70 to 75% of all of the companies who have reported earnings have beat on those earnings, including, thankfully, all of the names that we have been covering for the most part, at least. And I'm just excited to see where the rest of the month takes us, given this historical data and just general trend, given what history has to tell us. Okay, so the next two put an emphasis on offense versus defense stocks, or value versus growth. An example is Apple versus Coinbase. So again, value stocks, just kind of legacy stocks, the FANG stocks, the big caps, the mega caps, the titans of industry like Apple, and defense stocks. Those are defense stocks. And growth stocks, of course, are many of the stocks we talk about here on the channel: Coinbase, Riot, all of these puppies right here, of course. Okay, so just looking at these through a technical lens, it does look as though the next bull market cycle for growth stocks could already be underway. Again, there are undoubtedly risk factors on the horizon, but the bull argument is far more favorable than the bear one at this moment in time, for all the reasons we just discussed. Okay, so as you can see here, this dates back to 2016. And we can see, again, this is offense to defense portfolio ratios. So this is showing when investors are reallocating their portfolios to offense stocks and pretty much just getting more risk on. This is pretty much just showing risk appetite. And what we're seeing right now, again, a massive sell-off followed by a major spike. And this spike is different than these two. You can see these two spikes right here are a bit more organic. But this spike is very reminiscent of the spike that we saw during the pandemic. Granted, this was a black swan event, but at the same time, the sell-offs that we've seen over recent months are almost as bad as the sell-offs, again, experiencing both, trading through both. The first half of this year was almost as bad, I would say, if not equally as bad, and just despair-inducing as the black swan event that we saw in 2020. Okay, so right now we are seeing a very, very similar pattern playing out here. Again, we're going pretty parabolic. I do think that we can move up further, and I do think this will persist. But what I do like to see here is the similarities of these two trends, is the fact that, again, over the course of the past 6 months, growth stocks have gotten irrationally oversold, especially relative to large caps. I think growth stocks, for the most part, are still trading at a 12 forward PE, or price to earnings ratio, and mega caps are back at 16. So that still has some catching up to do. I still think growth stocks have some catching up to do. And I'm excited that we are seeing this reversal in trend. Again, not only because it's extremely validating to what we've been saying, but because it is extremely lucrative and profitable in the case that you're trading along with us, okay? So The second one, pretty similar here. You can see that this is pretty much the same chart, offense to defense, showing risk appetite. And this just shows a very, very obvious break in trend, right? So, series of lower highs and lower lows, nothing crazy here. Anyone could read that. This is a very obvious downtrend. But as of now, we saw this double bottom, and we have officially broken out of this downtrend. Okay, so we have broken the trend. We have seen a successful macro reversal, because this does date back all the way to the beginning of this year. And again, it's very, very possible that we do see growth stocks reignite to this long-term bull market. Again, I am hesitant given this chart right here, just talking the S&P. But I will say that even in the case that the S&P and large cap stocks slow down, I do believe that growth stocks can have some sustained relief just due to the fact that they got so ridiculously and once again irrationally oversold over the past 6 months. So, hey, if growth stocks keep on keeping on and the S&P and mega caps slow down, I think a lot of that capital could find a home in growth stocks and just keep that flywheel moving. So, speaking of growth stocks, let's quickly close it out just by reading this, because I always love to see titles like this, and I'm seeing more and more just articles come out talking about growth stocks, talking about small caps, and how analysts and institutions are becoming increasingly bullish on them like we are, because, every retail Joe out there reads CNBC, and this is good news. It's just furthering our narrative, right? So, small cap stocks could be setting up for a bigger win. Strategists who follow chart trends see breakout potential, and some fundamental strategists expect the smaller cap universe to continue outperforming large cap names. Small caps have been beating large caps for 3 months now, and obviously here in August as well, said Steven DeSantis, Jefferies equity strategist. Quotes, I think small has a very good chance of continuing to outperform large in the near term, DeSantis said. Economics are better, earnings season is better, credit markets are better, volatility is down. 1 or 2 weeks don't make a trend, but ETF flows into small caps have picked up a little bit, and you have a little bit of a tailwind. Small caps are also looking ready to break out on a technical basis, some chart analysts say, some chart analysts, including us. And yeah, you guys, this isn't completely relevant, but once again, this furthers our narrative. This validates. This is just an extra point of validation on top of course, the market performance itself in terms of what we have been believing would happen for weeks, if not months now. And yeah, I'm just super pumped to see what the rest of the month has in store for Waves Cap. So cheers to what has so far been, just the best week ever, the best week and a half ever, hopefully the best 2 weeks ever. We'll see how the rest of this week plays out. And cheers to you if you have not yet joined and you are going to join the winning team. So I'll see you guys in the comments downstairs. Let me know what you're excited about in this market environment right now. And until next time, always remember, take action, make waves. Peace, team.